Welcome to our weekly trade review series. I want to put together these videos to further explain some of the analysis that is going on within our Telegram. We're going to take 1 to 2 pairs per week and we're going to break down what we saw going into the week and then sort of where we end up. We want to call this our best trade of the week. So this week we're going to look at USDCAD. I'm going to go from the higher time frame explaining how I established my key levels. We're going to look at where my entry zones were, and then we're going to look why and where my projections were placed where they were. It was a very successful trade for us and all of our members. Let's get right into this. I just want to do a quick read through of the comment that I put. As here, August 7th. Today is August 9th. So this was actually posted on Wednesday. On the weekly time frame, prices entered a key level. I'm keeping in mind the 1.3500 level, psychological level, which has been respected over and over again. Down to the daily, I see an opportunity to draw our Fibonacci levels. Overall, my bias remains bearish as the break of lower support near the 1.313 level are minor and do not determine a change in overall bias. Down to the H1, we can now mark up some key levels of support. Upon a break of these levels to go along with our overall bias, short positions will be triggered. Some possible scenarios are mapped out for these short positions. With it in mind, 1.326 is a key level to close below to really push to the downside. 1.326 is this lower level of this weekly zone that I have marked. 1.350 is this upper level, so up here, this is a psychological level as well. And then, or actually, it's a little bit higher than that. So let's hop over to the chart. Now, what I want to do here is I'm going to start all the way on the higher time frame, and I'm just going to break this down as though we are earlier in the week, and then we'll get into the how it played out. So we're on the weekly time frame. I'm going to go get my rectangular tool. I can see here we can pull up the line chart, or I can see there's quite a bit of exhaustion here within these two candles, which shows how strongly price moved off this level. And then we also see that price held here for quite a bit of time. So before this week, as this week started, we were at around this area, and I was seeing how we broke below this major level of support. As we know, this is a lot of data here, so I'm looking more in this region. We broke below this level of support, which is pretty major. We're on the weekly time frame. If I draw this level across with this resistance and support, this is what we get right here, 1.326, so right around there. And then, as I said in the comment, go down to the daily time frame where we can then draw our Fibonacci. So I drew my Fibonacci from this lower high to then down here to this low, to this bearish candle where it then found support. From here we see obviously this is transitioned into a downtrend, breaking support here. So our projection was for August 7th was right around here when we were looking at this area. I saw that it is within this weekly level. We maybe put this replay tool here, we can sort of get a better picture. So I saw all this exhaustion coming off this 78.6. I know that we have this weekly level, this Fibonacci's marked. That's two confluences right there, resistance, Fibonacci, and then also some price action confirmation for us. So yeah, we know also along with the US dollar being very speculative this week with a lot of fundamental news coming out, it's been pretty weak. And so from here, I noticed that I should go down a time frame and then start to maybe picture as though whether this market fell like it did. So now we're on the 1 hour time frame. I can see this large push to the upside followed by these two subsequent pushes that had less volume. This from this level was reaching projection levels, negative 27, negative 61.8. So from this area, I just have in mind that the market is very overextended. So I marked off this level of support right here, knowing that if the market manages to break this level, and even this more minor level here, that a transition becomes a real possibility. Now, as you say, where do I get my projection levels from? So I came down to this area. We see that this market has been trending in an uptrend for quite some time. We could even mark support level here, which it has respected 1, 2, 3 times, and then a support level here, which has been respected multiple times. So these are key areas that we can see the market come to retest again and maybe find support at. But we know these are main levels on this 1 hour time frame, and then also we can draw this trend line. So we can draw with a few different possibilities. We can draw from this wick down here to this wick right here and drag across like this, like so. So now you're starting to see a better picture of where I found that support level at. So I'm always going to look at my projection for either negative 27, negative 61.8, or more major level, this trend line, which has been held for quite some time. If it does manage to transition from this higher level, this is really where I'm looking for price to go before it slows up. So yeah, we got a picture of, we have this break of support here as the market starts to transition to this downtrend, and we can even be on lower time from here, say M30, we can see this lower high form here, and so potentially we can already get in on this order. And this is really based on that higher time frame, how we have this key level and that Fibonacci level, which held so strongly. So let's just play it forward a few candles and start to see what really takes place within the market. So again, on this lower time frame, first potential entry area was here. If we see this break of support on M30, the transition is already upon us, already happening. But now even on H1, I have in mind this key level. You could even take a breakout right here, so potential entry up here, potential entry right here. Our stops wouldn't be as friendly if we entered on this breakout. I would put them right above this level that held, and then our projections would be down to at least a 2.0, so projecting to around this area down here. So that's a potential entry, or we can look for the retest of this level or these two levels as happens with so. So we'll play forward a few candles. We see a bit of a retest here, and then we see a little bit of rejection that is coming out. So we'll see in this area a nice rejection of, again, this level up here, and this is a little bit of a better entry on this position. So we can enter right here. We'll have stops above our resistance level, and then again we'll target down in this area, either to this level of support or right around the trend line, right where we are at least a 2.0 risk to reward ratio, so that we can stay within our risk management plan. And then yeah, if we just play this forward a few more candles, we can see really how this trade played out. Fell pretty nicely up around this area is where I would move our stops to 0, and then we see it continues, and then again this is right around yesterday evening and today. So Friday is obviously a little bit lower volatility, and yeah, we're just maintaining this trade now. We can look at this as a level of resistance, even this level up here, median of these wicks, as another level of resistance if we're looking where to move our stops into profit. And then we'll maintain this trade. Say we're projecting to that level, we can close right here, and that's a pretty successful trade. So yeah, this was the weekly trade review. I'm really excited to get these started and to start to develop these and really carve these out to be an extremely valuable resource for you guys, looking at that higher time frame, putting down our key levels, then getting down to where the transition is actually taking place, and then all the way to our entries. So once again, this was USDCAD. We can see if we go back to how this played out, came retraced and came right down to this level. Some news manipulated this wick up in this area. So based on where you're really projecting it to go till, you were safe getting out here, or if you even held further, it did make it all the way to this trend line.